Michael Lee, it's been a big week for bank stocks. A lot of the larger names have beaten Wall Street estimates, and that's after a very slow first quarter. So that should be reassuring to you because you're a fan of the sector.
I really like the sector, and it's good to see them beating earnings and getting ahead of estimates here. These banks have gone through so much over the last few years in a really, really tough environment from a trading standpoint and also from a lending standpoint with interest rates so low. So to see them getting ahead of where the street wants them right away is very encouraging.
Well, one stock that you like is Wells Fargo. Of all the big banks that reported this week, they had the most mixed results. Costs were up and profits were down for the second straight quarter. What's going on there?
You know, the reason I like Wells Fargo is not so much as what's happened, it's what's going to happen. Them being the cleanest, largest money center bank that's out there in a rate hike environment, I really think that they're going to profit the most. I still believe they're the best run bank, money center bank on the street.
You're also a fan of Bank of America. Now, it seems though Brian Moynihan was very happy this latest earnings period. It seems as though the fines and the regulators are behind him. They can finally look forward.
You know, Bank of America has just gone through so much through all the acquisitions, through the downturn in 2007, 2008, 2009, and the legacy issues that have come from the mortgage crisis. To see them start to finally get the stuff behind them and hopefully, you know, knock on wood, this is the last quarter where you're going to see that. The most interesting part of Bank of America is they haven't moved anywhere near as much as some of the other big banks. So I think there's an opportunity for some real upside there, and with their size and scope in a rate rising environment. So you go from a really tough trading and banking environment to a really positive one that I think we'll see over the next 12 to 24 months. You know, this stock could really, really do well.
And then finally, JPMorgan Chase, another name that you like, beat earnings this latest period. And Jamie Dimon even hinted that he may not come on the next earnings call. Maybe he's tired of them. I don't know. Tell me about the stock.
Well, I really love JPMorgan. I've been a fan of it for a while now. One thing about JPMorgan is it continues to hit all-time highs. One line I like to use and tool of advice I like to use is from the founder of TheStreet.com, Jim Cramer, and that's stocks that hit all-time highs usually continue to hit all-time highs. And for them, where they really make most of their money is from the lending business. And going through all the legacy issues that they've had with the absorption of Bear Stearns and Washington Mutual and finally getting that behind them, trimming down operations to be a sleek machine to where they are right now, you know, they could really explode to the upside in terms of earnings on a go-forward basis with a better trading and lending environment, which I think we're going to see over the next few years.
All right. Thanks a lot for coming.
Greg, thank you.
Thank you for watching The Street.